Hi guys, so today we are going to be answering the question, how do Forex brokers make money, guys? And it's free to open a trading account, so most brokers, they don't have fees attached, and they even allow you to open with as little as $10 you could start an account with and grow from there. So that is a possibility. So most people are asking, how do they make money then? Because they don't charge you to open an account, they don't charge you to place a trade. So in order for me to explain that, I need to explain to you a bid price and an ask price. So when you look at a chart, you are usually seeing one price, but there's really two prices. So, and it depends on the type of chart. There's bid price charts and there's ask price charts. So when you look at a chart, the bid price refers to the highest price our buyers willing to pay for that currency security. And the ask price refers to the lowest price a seller is willing to accept for the security. And the difference between those prices is what you call a spread. And the spread is how these brokers make their money. So when you know the difference in the prices, and this is something that you will know upfront, the broker will have an actual list of the spreads that they offer on some of the pairs. Some brokers even offer like zero spread on certain pairs, right? And if you know the spread, for instance, is 3 pips going into that trade, you basically know or should be able to calculate the broker's fee upfront. Because if the spread is 3 pips, right, and you are trading by $1, when you place that trade, your trade is automatically going to be minus $3. That is the broker taking out their fee up front. So this doesn't come out, now note, this doesn't come out of your balance. So if your balance is $1,000, your balance doesn't drop by $3. Your balance stays at the 1,000, but it's just built into that trade. If you go on to make $20,000 on that trade, the broker does not take out additional money. Their spread is what they took out up front, which in this example would be the $3. If I was trading by a standard lot or $10, and I have a spread of 2 pips, that means I'm paying $20 to the broker, and that is how the broker makes their money. They're going to get paid on the spread, and their play is a volume play. So it doesn't matter if you feel, all right, I'm only paying them $1. But remember, it's millions of traders paying $1 every single time they place a trade. And that's me using $1. What about the traders who are trading by $100 a pip? Alright, so if you're trading by $100 a pip and the spread is 2 pips, the broker is making $200 every single time you place a trade. And that's how it varies, and that's how they make their money. There's another way that the broker makes money, which is the rollover fees. Now, this fee is something that I don't really touch on as much, because it usually tends to, if you're trading different currency pairs in different directions, it usually tends to work its way out. So what it is, it's the rollover fee. So this is a fee that's charged basically if you're a swing trader or you leave trades open longer than a day. When the trading day ends and you have a position open, you might see a fee that the broker has, and what that is, it's a rollover fee. And the rollover fee is basically just calculated based on the difference of the interest rate between the two pairs. So I know we're getting technical here, but just if you're trading the Aussie and the US dollar, alright, and the Aussie has a higher interest rate than the US dollar, let's just say for example, right? And you are buying that means you favor the Aussie. So if you actually have an open buy on the Aussie US dollar with a higher interest rate, with the Aussie having a higher interest rate, that rollover fee is going to be positive. So the broker is actually going to pay you to hold that trade open. If you are favoring the negative or the pair with the lower interest rate, the broker is going to charge you a fee for holding that trade open. So this is the reason why I don't talk about this one. If you're trading multiple pairs, in multiple directions, some you're buying, some you're selling, sometimes you might be buying one pair, sometimes you might be selling one pair, this fee tends to negate itself. It tends to cancel out each other, because on some trades that you take, you will be paid a positive rollover fee, and on some trades that you take, you will be charged a negative rollover fee. So you might make $1 here on one, and then they might charge you $1.03 on one, and so forth and so forth. So that fee tends to work itself out. So it's something that I don't usually mention, but that is how a broker makes money. And then there are also some brokers who charge a commission. Alright, so the commission, again, these fees are, commission is just a percentage, and the brokers usually have these things stated outright. You will be able to determine, alright, this particular broker charges rollover fees, commissions, and the spread, or this particular broker doesn't charge any commission. Some brokers don't charge a commission at all. They just deal with the spread and the rollover fees, and that's basically it. So brokers tend to make money mainly from the spreads. And again, it's not a hidden fee. It's something that you will know from the onset. In doing your research to find a broker, you would be able to say, all right, this broker has better spreads, which is something most people look for when choosing a broker. I personally don't look at just better spreads. So yes, what I want is competitive spreads. Because you see, I've been trading for 15 years now, over 15 years. And I was around when the Swiss franc unpegged from the euro. So the euro and certain pairs are correlated or have a relationship. And the euro and the Swiss franc were pegged together or paired together, right? And what happened was, when they made an announcement, when the Swiss franc was announced to be unpegged from the euro, that particular day on one pair we had over 3,000 pips along all those Swiss franc pairs. So you're talking about Swiss franc, JPY, Euro Swiss franc, Aussie Swiss franc, New Zealand dollar Swiss franc, US dollar Swiss franc. All those pairs basically had pushes in that direction. And what that did, a shock move like that in the market, basically caused brokers to go out of business. Like, if you are a smaller broker, because you're trying to be competitive, you're offering these low spreads. But understand this, if you were in the wrong direction, a lot of traders' accounts went actually into negative with that move. But if I was in the right direction and I made $1 million in that particular day, right? Let's just say, the broker has to find that money when I'm ready to withdraw. And that is why one of my main things is, when I look for a broker, I want to look for security. I want to look for the track record. I want to make sure that you are regulated and what service and support you have. So that is more what I look for in a broker, rather than just running to say this broker has zero spreads or low spreads. Because I've seen enough in the markets that you don't want to go with the reality of it is hard to choose a brand new broker, at least for me. Especially if you're talking about moving all your money. So fine, you want to move a small portion of your money, see what's the option, see if you're getting better service, and test it for a while. Fine, but if you're a brand new trader, you want to choose a broker that's already been tested, that the strategy has already been, not the strategy, but their technology works good, you don't have slippage, things like that is more what I want to look for when we're talking about finding a broker, guys. So for me in particular, I look for security. That's my main thing. I want to make sure that they're regulated, and I want to see what service and support. So right now for my clients, I only recommend 2 brokers basically. And again, I've switched this ever so often. I do my new research. I test out new brokers. I do. And if I can offer a better option for my clients, I do let them know. But for right now, I'm using 2 brokers, and what I will do in the link in this video, you'd be able to see. And if you all want to open an account with any of those brokers, with any of those 2 brokers that I use. But that is how brokers make money, guys, and I hope that helps. I hope the explanation helped you understand a little bit more about the bid and ask price, about rollover fees and spreads, and how the brokers actually make money, guys. I'll see you all soon.